ACT Atal Training and Learning Online Faculty Development Program on Corporate Restructuring of Public Sector Banks in India, present scenario. Today, our guest speaker and most resourceable and resource person, my good friend, Professor P.S. Velmurugan, Dean, School of Legal Studies, Central University of Tamil Nadu, Tiruvarur, former Dean, School of Commerce and Business Management, Central University of Tamil Nadu. He is going to talk about public sector banks, the reality behind financial restructuring for prudent governance, the privatization scenario. My dear friends, the last 4 days, so many resource persons were discussed which is relevant to the domain of corporate restructuring, whereas today Professor Velmurugan is going to talk about the privatization scenario, which is more relevant for financial restructuring. On behalf of the Department of Corporate Secretaryship, the portal of AICT online FD program, I extend a hearty welcome to Professor P.S. Velmurugan, sir.
Thanks a lot, Doctor.
So, and also to welcome the participants and faculty colleagues from across the country, and also to welcome my own faculty members, Department of Corporate Secretaryship, and the faculty members of Faculty of Management of Alappa University, and also to welcome our own students, research scholars. This very good morning. Yes, this happy Friday, very auspicious day today. So we are going to invite a student, Kausalya. You have to introduce our resource person, Professor P.S. Velmurugan. Thank you.
Good morning to each one of you present today. Let me introduce most respected today resource person, Dr. Velmurugan, Sir, Fulbright Postdoctoral Fellow, Dean, School of Legal Studies, Central Universities of Tamil Nadu, former Dean, School of Commerce and Management, Central Universities of Tamil Nadu, Associate Professor and Head, Department of Commerce, Central Universities of Tamil Nadu, Nodal Officer, Unat Bharat Abhiyan, Central University of Tamil Nadu, Formal Nodal Officer, Community College, Central University of Tamil Nadu, Coordinator, UGC Trade Component, Student Placement Officer, Central Universities of Tamil Nadu. Awards. National level recognition by Indira Gandhi Technological and Medical Science University. Arunachal Pradesh has acknowledging the qualification, experience and outstanding contribution in the specialization area of commerce and empathered research guide in the commerce discipline. Awarded Fulbright Nehru Postdoctoral Research Fellowship by United States India Educational Foundation. Fulbright commissions in India to take up research in Arkansas State University, Jonesboro, AR 2011 to 2012. Received UGC Research Award 2016 to 2018, Sustaining Corporate Prosperity, Integrating Social, Environmental and Ethical Responsibilities into the Governance of Business. Honor Senior Research Fellow of the Regional Center Puducherry Institute of Social Science. MPhil 13 completed and 1 submitted, PhD 6 awarded, 4 undergraduate. Thank you, sir.
Thank you for your introduction, Sangavi.
Now the sessions turned out to our resource person, Professor P.S. Velmurugan.
Thanks a lot, Professor Professor Vedirajan, Head Department of Corporate Secretaryship, Nagappa University, Dr. Ganesamurthy, and other faculty members of the Department of Corporate Secretaryship. At the outset, I thank you a lot for giving this opportunity to meet you virtually, to meet all the participants of this FTP program today. Now I will start my presentation by sharing the screen. Just a second. Is it visible now? Is it visible?
Yes, sir. Yes, sir.
Okay, very
No
good.
uploading.
Yeah.
Visible.
So again,
You may change slideshow mode, sir.
yeah, it is changed already. It's
Yeah.
slideshow mode, yeah.
Right.
So, very good morning to one and all. Today, I am going to present you on yet another important aspect of corporate restructuring. I will be approaching the entire nutshell of this particular presentation will be what is corporate restructuring. Why did, like say, Government of India, particularly Reserve Bank of India, preferred corporate restructuring into the banks, particularly the private sector, public sector banks in our country? The popular mode which they have taken for restructuring, that is a merger. I'll be giving some inputs on merger and the outcomes. What is the current state of the merged banks? And I'll be moving on to why did Government of India preferred privatization of public sector banks, and it's also a mode of corporate restructuring. And I'll be giving you my inputs, my approach, my own views on what could be the probable outcomes if the public sector banks are privatized in India. Okay, so this is my the crux of the presentation is going to be in these lines. Let me start with for the past 3-4 days you would have listened to a lot on restructuring and corporate restructuring. But however, it's my duty to brief you on what is restructuring. Initially we will try to understand what is restructuring, what is corporate restructuring, and why types of restructuring, and what could be the benefits of restructuring. So restructuring is an action basically to modify the financial and operational aspects of a company. Any company for that matter, any corporate sector for that matter, including our own domain, it's public and private sector banks. When the business is facing some financial pressures, disturbances, distress, etc., they usually think for restructuring. Most probably, restructuring happens in the case of when the business entity is having a lot of debt, or if it faces product failure, if it faces, like say, a disturbance in the top management. In those conditions, normally, like they look out for restructuring their business operations. For example, when a company is having difficulties with making its payments, mostly, which means that they don't have enough reserves to meet their vendors for that matter. In such case, they consolidate and then try to they go for a debt restructuring so that they safeguard their operations, they safeguard their place in the society in the sense among the business community. A company can also restructure its operations or by cutting costs, such as payroll, which means that reducing the pay structure of the employees, or cutting down the size of the employees, cutting down its operations. These are all aspects which are normally taken into consideration when a business entity is looking for or facing a situation to go for restructuring. what is actually expected to enter or to capture a particular market or to position a particular product in a particular market. All these things could be reasons for strategic alliance. It's also a part of our restructuring strategy. And the last one, which I want to raise, is the slump sale. Because why I have highlighted slump sale is that an entity transfers its one or more undertaking for lump sum consideration. Under the slump sale, an undertaking is sold for a consideration, irrespective of the individual values of assets and liabilities. Now, in the earlier slide, I was talking about disinvestment. Now, I'm just giving some importance on slump sale. Here, I want the participant to understand these public sector banks were created in this company with a lot of thought process which went on in creating, the nationalization of banks, which we classify public sector banks, which usually have a lot of Government of India shareholding. They have a very big, massive assets, and however, there are, substantial non-performing assets, which are built on for year after year, and because of bad loans. But however, what I wanted to understand is that what is going to be the value of this public sector banks, which is going to be sold to private sector, which you convert it into private sector. For any bidder could be we don't know who is going to be the bidder, what is the size of bidding process, but what is the value from Government of India? Is it going to be a slump sale or it's to pay a throwaway price? That is the question. That's why I highlighted here. That is an unanswered question which we all have to carefully watch. What is the price at which the very big the public sector banks are going to be, one or two, whichever we don't know, whether it is going to be the entire PSBs or few, still now there is no answer for that. But what I say is, we need to watch what is the kind of price consideration on which they are going to sell the assets of the public sector banks. So the corporate restructuring techniques, I have just classified them in the form of it's in the form of a flowchart. There are some expansion techniques, which is merger, takeovers, joint ventures, which I just mentioned, and disinvestment techniques. It can be a sell-off, hive-off, demerger, slump sale, which I have. This is the case which I wanted to observe, or you observe, because it can be a disinvestment technique, which can be a slump sale, or which can be a going private, which means like the other technique. But however, what I insist is that Government of India and the Reserve Bank of India, when it comes to restructuring of our public sector banks, they have tried several methods of restructuring them so that they could be doing a sustainable business on their own without depending upon, frequent funding from, Government of India, either through the budgetary allocations or, infusing funds whenever it is required, when there is a need for meeting the ratio requirements of the Reserve Bank of India. So now, this is a quite interesting thing which I want you to concentrate to look into. Here, in the next 3 slides, I'm giving you a list of important committees related to banking and finance in India. You all are much popular, might have heard about a lot about Narasimham Committee, Verma Committee, and Nayak Committee, Watney Bandari Committee. If you closely, it's in the ascending order, in the alphabetical order, right from A.C. Shah Committee, A. Ghosh Committee, Kandelwal Committee, Abid Hussain Committee, Aditya Puri Committee. There are hundreds of committees from when in the past 20-25 years to restructure the operations of public sector banks and financial institutions in India. Okay, right from 1, 2, 3. 3 slides. I have just mentioned 100. It's a data which talks about committees which is formed in this country in past 20-25 years to give ideas, inputs, valuable intellectual inputs to make the banks and financial institutions to perform in a very because it's public sector, I will not use the word profitable, but in a expected level of self-sustenance. my question is, my question in the sense, what I observe is that, can there be a failure of merger process? Can there be a failure of any sort of restructuring process which is adopted in India after having framed hundreds of such committees, more than 100? The list is there. All are experts in the field of finance. All are considered to be the who is who of the finance domain in this country, banking domain of this country. Definitely, they are not, like say, a layman or not related to that industry for that matter. They would have given exactly. I agree. I have read documents of Narsimham Committee, Ravarma Committee, and other committees, very popular committees, if not 100, all the 100. Few committee reports are like say, because we are into the teaching process, we read the documents. All are excellent suggestions given by all these intellectuals. What happened to the suggestions? Whether it is implemented properly. Why not? If not, why not it is implemented properly? If it is implemented, why the suggestions got failed? There is to be someone to answer these questions before considering a merger process as a failure process. Because if you talk about privatization, if the government of India is talking about privatization, there should be, we all consider that, yeah, if I'm talking about privatization, which means that other strategy which is adopted by me, which means merger, acquisition and amalgamation process, it would have failed. Otherwise, I am not going to talk about privatization. If so, my question is, what has been recommended by all these committees so far? Why it is not implemented? If implemented, why it has the institutions has failed? Someone should give an answer. It's not one committee, two committee, 100 plus committees. And again, when we talk about failure, NPAs, bad loans, bad banks, what is this happening in our country is the question which has to be raised among the participants in this FTP, because we are all stakeholders. We are all stakeholders. We all have accounts in public sector banks and private sector banks. We are all part of the system. Any change in the restructuring process, any restructuring initiative taken by Government of India or the Reserve Bank will have a serious impact on you and me. So we are not discussing a concept, a topic which is irrelevant to us. We are meeting today to discuss about a topic in which we are all stakeholders. This is my question. When more than 100 committees were formed to normalize the affairs of the banking business, but no authentic solution for the pathetic situation of India's banking failures, both private and public. However, the most quoted are the recommendations of the following three committees, because I always look at these committees: Narsimham Committee twice, and MS Verma Committee, which dealt with measures for revival of weak public sector banks. Because I will be concentrating more on Verma Committee, because I have taken some inputs from Verma Committee to discuss with you today. And the PAJ Nayak Committee, which is formed for governance of Board of Banks in India. So now I mentioned about three committees, and I also told I'll be discussing much about MS Verma Committee. Okay. A report of the working group on structuring weak and public. It's the Verma Committee has submitted a report. I mean, it's closer to the end of the last century. Okay, the Reserve Bank of India, in consultation with the Government of India, set up the present working group under the chairmanship of Sri MS Verma. But what is the focus area for the committee? To suggest measures for revival of weak public sector banks, which means some 20 years before, a committee was formed under the chairmanship of MS Verma. Okay, what is the focus area, thrust area of the committee is to suggest measures for reviving the public sector banks. Okay, and there are some, like say, weak points were there. They to study the problems of weak banks, to examine the criteria of identification of weak banks, and to undertake a case-by-case examination of the weak banks. Yes, they did. It's a good report. Case-by-case identification of weak banks were presented by the committee, and they have even mentioned how to, like say, revive the weak banks. Wonderful report. In that report, it's a huge report. I'm just giving you certain inputs from the report, MS Verma Committee report. Because my discussion, I'm discussing only about two restructuring processes. One is merger and another is privatization. So I have given some inputs on merger and privatization. What is discussed in the report, some 2020 question. If it is well documented and suggested to you, then how come there could be a failure in the merger process? That is the question. How come a corporate restructuring process adopted by hundreds of, let's say, report, particularly with experts like Verma, how come the process failed, and whether it is implemented or not, which requires a separate PhD level research, not one, several research has to be conducted, because I know that we have read a lot of documents and other things. No, things are not gone beyond our hands, and a lot of disturbances have come in the way of implementation. And the second most suggestion, what he himself has mentioned, is privatization. And again, he has mentioned that privatization is an acceptable course in the corporate restructuring, as the process alone can reduce the government's responsibility of capitalizing the public sector banks further, and in the long run enable it to recoup fully or partially the investment made in their capital, which means the government can go for privatization if it feels that it wanted to recover the investment made in this public sector banks. Okay, in such case, however, he himself has mentioned that the privatization in any case is not the only remedy, and if at all privatization is going to be adopted, it has to be taken as a very, very, very last resort in the restructuring process. This is the essence of the committee, Burma committee. However, now, let's say you should be, because the committee has mentioned about mergers 20 plus years before, they have said, yeah, go for mergers. And even National Committee, he has prescribed one international bank, three, let's say, national banks, and a few local banks. The structure also is there. And several other committees like Verma Committee has gave a go-ahead note for mergers. And what is the history of these mergers? In 1991, the financial reforms were initiated as part of the economic reforms. We all know, okay? Our financial reforms is part of the economic reforms. The several economic reforms were carried out in our country, implemented in the country after 1991, which we call LPG. 1991 onwards, there has been an institutional change in the banking sector, including mergers and amalgamations. Those days we called them as nationalized banks and non-nationalized banks. The first merger in 1991, like say, number of public sector banks were 28, which means 20 public sector banks, and other 8, which means the State Bank of India associates. You all know, in 1993, the Arshad Mehta scam, where the new Bank of India is merged with the Punjab National Bank, okay, resulting in 27 banks, which means one of the, like say, public sector bank was sized down, and we had 19 plus 8 SBI associates. After some time, some around 10 years, in 2004, again, IDBI, which is started as a private sector bank, was reclassified as a public sector because government holding went beyond 50%, resulting in 28 banks. After 4 years, in 2008, State Bank of Saurashtra was merged with the SBI, so the net came to 27. Later, in 2010, State Bank of Indore was merged with the State Bank of India, resulting in 26 banks. In 2017, you all know, SBI and 5 associate banks got merged, which means the State Bank of Bikaner and Jaipur, State Bank of Trivandrum, State Bank of Patiala, State Bank of Mysore, and State Bank of Hyderabad all got merged with the parent institution, the State Bank of India. In 2019, Dena Bank and Vijaya Bank merged with the Bank of Baroda, resulting in 19 banks. 2019 again, IDBI was reclassified as a private sector bank. It is moved out of the PSU list. Reclassified as because Life Insurance Corporation, there was a crisis in IDBI Bank, which I don't, for want of time, I'm not going into the sort of crisis. And LIC came to the rescue, and it purchased 51% stake in IDBI, and that's why it is reclassified into a private sector bank. Again, in 2019, 10 public sector banks are merged into 4, resulting in 12 banks. As of now, we have 12 public sector banks. So even these 12 public sector banks, I'm going to give you the list. I'm going to give you the basic data about the merged banks. And now, after doing all this exercise, bringing down the size of public sector banks from 28 to 12, which means we either merged or replaced to a private sector. Almost 16 banks have gone now. Okay. Now, after doing all this exercise, after having hundreds of 100 plus committees on recommending for the sound business operations of these banks, now the government of India, probably our support of our Reserve Bank of India, now they have started talking about privatization. That is the one which makes me a bit disturbed, not able to accept. Because we are also teacher, we are also doing some consultative activity, we are giving some ideas and other things. But how come a nation as such is a huge number of experts giving their, inputs for a better functioning of the banks could fail? So just have a look at the government holding, which increased or decreased from 2015 to 2019. We could be able to see that the government holding has increased substantially in this period with a huge capital infusion from the government of India, because they are public sector banks. Okay, periodical, budgetary, non-budgetary capital infusion has been made into these public sector banks to meet the norms prescribed by the Reserve Bank of India, and they have a very good, huge market capitalization, starting from, with the number one bank, that is State Bank of India, with the close to 2.5 lakh crores. And if you closely watch the private banks and the public sector banks, you're able to understand that the return on equity of public sector banks are coming down, the gross net performing assets are increasing, and at the same time, when it comes to the capital adequacy ratio, compared to private sector banks, public sector banks, CAR is quite less and it is fluctuating. Coming to the some key aspects of the public sector banks merged recently. I'm talking about the 10 banks which is merged into 4. Okay, you know that Punjab National Bank, Orient Bank of Commerce, and United Bank got merged with the Punjab National Bank. We know it comes under the broader view of Punjab National Bank. The current asset, the current account and savings account, which is compared with the total deposits, which we call the CASA ratio. Other thing is CRAR, which is a current account ratio, which takes it also considering the risk. This and the NPA ratio. CET1 is the latest indicator considering the equity of ownership equity of the banks. These are the common inputs which is considered for usually considered, because these things give some importance or let's say good information about the merged banks. However, in the case of all the 12 which got all the 10 which got merged, okay, the case is a bit still not comparable with the sound banks which have very good CAR, very good PCR, very good CASA, very good CI ratio for that matter. The same is the case with Canara Bank and the Syndicate Bank. Same is the case with the Union Bank, Andhra Bank and Corporation Bank, and at last the Indian Bank and Allahabad Bank. But this merger has given very good scope for this public sector which got merged, because the asset base is huge now. We have surplus, assets, disposable assets which can be disposed in the form of loans and advances to the public, which means to the corporate houses and general public for that matter. And they are they are bigger now. They are bigger, and they also have enjoying the synergy which has been created because of merging, which means in terms of geography, new geographies, in terms of new products which can be offered. So these are the advantages which arise out of this merger process. Now we have in case of the deposits, Punjab National Bank with close to 10 lakh 43,000 crore. The number of employees around 1 lakh and branches 11,437, and number of ATMs 13,800. And these are the data which related to all the major 4 bank groups which got merged. And interesting, they give commitments to infuse fresh capital into public sector banks, either for the year, for a few years for that matter. Governments give commitment, and periodically they used to infuse capital. From the right side of this slide, you can understand that there is a periodical infusion of capital from Government of India. The recapitalization process went on meticulously year after year from 1992 for a long time, since nationalization process, closer to again, no, it was 2,11,000 crore of recapitalization that went into the public sector banks. So the prior to privatization episode, the government was actively, by this time you would have understood that there is an active involvement of the government for a long period for the merging and consolidating these banks. During 2019-20 alone, the Union Govt has consolidated 10 public sector banks into 4. As a result, the total number of public sector banks came down to 12 from 27. The government has merged 14 public sector banks in 4 years, which I just briefed you on. It is said that such big consolidation exercise is effective to make Indian public sector banks globally competitive. So now we all know that, we all understood that huge merger process, huge exercise of merging, amalgamating public sector banks was undertaken by Government of India for quite some time. I have given you the history. For what? Globally competitive, creating big banks, massive banks, synergizing themselves for the geography and for the products, for that matter, making them technologically sound and to the state of the art technology that is available with the better performing banks, reducing their non-performing assets, not depending on government for recapitalization. These are the focus points. Okay, they should have achieved by this time, and that is the reason for merging process. We have now 12 banks now. State Bank of India, Punjab National Bank, Bank of Baroda, Canara Bank, Indian Bank, Bank of India, Central Bank of India, Indian Overseas Bank, UCO Bank, Bank of Maharashtra, and Punjab and Sindh Bank. These are the 12 banks. I am not including Jammu and Kashmir Bank, on which also government has a stake of 61.18%. But however, excluding Jammu and Kashmir Bank, all these banks have substantial government holding. As of now, even certain banks have more than 90%, like Bank of Maharashtra and Union Bank have more than 90% of government stake, and banks like State Bank of India have around, let's say, 60-61% of government holding. Now, if you look at the business size of 12 public sector banks after amalgamation, okay, after, it's 2019, you can understand that, like say, State Bank of India has a business of 52 lakh crore, okay, and at the end, the smallest bank among the 12 PhDs may be the Punjab and Sindh Bank, which has a 1.71 lakh crore of business. Altogether, these 12 public sector banks today have 150 lakh crore of business, huge business. 150 lakh crore is the size of India's budget, almost 3/4 of India's budget. India's GDP. Can you imagine? So we should pursue, our thought process, our understanding on these public sector banks should be that they are, like say, assets of our country. Like they are like golden egg layings. It should be perceived in that way. We have to take all possible measures to preserve them, to safeguard them, because the contribution these banks make to the society, okay, it is enormous, huge, uncomparable with the private sector banks. Coming to the merits of public sector bank mergers, which I'm just concluding on the public sector bank mergers. As I told you earlier, service delivery should be better. Now they should be having a large capital base. Yes, they have a large capital base. They should be having a much wider range of products. They can choose like mutual funds, insurance products, loans, deposits. Okay, now it should be there. Yes, it is there. Need for capitalization from government will reduce. Yes, this is one of the important aspects for merger, and hopefully we can expect that these 12 banks may not expect much from the budget of Government of India, which means the keep on recapitalizing them again and again. And there's an opportunity to establish technological advancement. Yes, like say, these merged banks definitely will have the state-of-the-art technology sharing themselves. Probably, like say, Allahabad Bank would not have this technology maybe available with the Indian Bank. That is the purpose of this merger. Definitely, all these advantages which is available with the better bank among the merged banks would be shared with all the banks which got merged. So, after merger, these merged banks are expected to transform from a bad bank to a good bank. Yes, it is the expectation. It should be the expectation. It should happen. No more they should be classified as a bad bank. It is a responsibility of the Government of India. It is a responsibility of the board of directors of the bank. It is a responsibility of the Reserve Bank of India to monitor, to supervise, to do due diligence frequently on the operations of these 12 public sector banks, because no more we have come to a threshold limit, a critical limit of 12 big banks now. Okay, so we should preserve them so that they could perform a very serious public service to this country. In this background, we are running short of time. I'm just moving a bit fast because only now I started covering on privatization. If I wanted 10 or 15 minutes extra time, I will request the organizers to permit me to go beyond a little bit of consuming your time. So, in this process, after doing this massive exercise, now government is talking about privatization. When did the talk come? Because of our finance minister Nirmala Sitharaman, she announced in the budget speech while reading the budget papers. She said that a few banks, the government is having some idea of privatizing a few banks, public sector banks, and that started the issue. Issue also started. Meanwhile, some background operations also started to privatize the banks. To form the committee, to giving responsibility to Niti Aayog, to formalize, ways and means of privatization. All these were happening. Simultaneously, stakeholders, the prominent stakeholders, which means the employees, the staff and officers, started agitating against privatization. And a section of people were also a bit, not happy with the privatization process, because they were all linked with they are also prominent stakeholders, the beneficiaries of the public sector banking system in our country. The issue got, a bit hyped or bit, much impact. After the speech of Mr. T.V. Somanathan, the Finance Secretary of Government of India, what he has said is that he said he will go beyond the suggestions of PL Nayak committee recommendations and eventually privatize most of the public sector banks, which gave understanding among Indians, among the stakeholders, that so all the 12 public sector banks are going to be privatized either today or tomorrow. That was the opinion that got, communicated. The way in which it was communicated, it reached in such a way that all the 12 public sector banks are going to be later the government, was forced to give statements like, no, we are not going to privatize every bank, all the 12 ones. We are just concentrating on 1 or 2 banks. And because Niti Aayog was interested with the task of selecting the 2 banks among the 12, 2 banks for privatization. So, in the processes, in April 2021, a few months back, Niti Aayog suggested a couple of banks for privatization, it had a core group of secretaries on disinvestment. The government department secretaries, core departments like Department of Economic Affairs, Revenue, Expenditure, Corporate Affairs, Legal Affairs, Administrative, Public Enterprises, Investment and Public Asset Management. The secretaries of all these departments were formed in the form of a core group of secretaries to suggest measures, to select 2 banks. Ultimately, I think they have selected few banks, and it is not an open document now. They have almost narrowed down on the 2 banks among these 12 to be privatized. Okay, and it is not the end process. A few more process is there. They are going to give these names to be shortlisted to the alternative mechanism for consideration. Following the clearance from the alternative mechanism, it will go to the Union Cabinet. headed by our Prime Minister, who will give a final nod, yes, go ahead for privatization or not to go ahead for privatization. This is the current state. Okay. So, why all this is happening? Very important thing which I want to privatization headache of the government of India. It is not happening for considering the rising NPA issue, which is again a debatable topic of the public sector banks. The government of India wants to disinvest two public sector banks to meet its budgetary requirements. How much they are going to raise? 1.75 lakh crore for a stake sale of two public sector banks and one insurer for the matter. So this is the issue now. Whether the privatization process is only for because of the bad loans and the NPA, rising NPAs, or like say, are you really concerned about the bad management that is there in the private sector banks, which can be, public sector banks, which can be rectified with the changing combination in the board of directors, or selecting a very good CEO for the public sector bank. All these things are trivial issues which can be handled by Government of India, by Reserve Bank of India, by the one of the toll banks for that matter. But however, they are preferring privatization for raising funds for the budgetary gaps, the fiscal deficit that is there in the Government of India. So, though the name of banks to be privatized is not revealed yet, the Niti Aayog has given a recommendation of few banks to be privatized. From the advice of Niti Aayog, which said that the newly amalgamated, like say, public sector banks is not going to be considered for privatization, and State Bank of India is no question there, it is not going to be privatized. So from this we can understand that there are only 5 banks which are eligible for, 6 banks which are eligible for privatization: Bank of Maharashtra, Indian Overseas Bank, Central Bank of India, Bank of India, Punjab and Sind Bank, and Union Govt. These are the probable banks. Because Niti Aayog's statement, we can able to identify 1 in these 6 is going to be, or 2 in these 6 is going to be privatized. On what category, on what will be the categorization factors which will be used for narrowing out 2 public sector banks? Among these 6 would be, one is market capitalization, the price earning ratio, the price to book value, and the capital adequacy ratio. All these things are very popular concepts, which I don't want to brief further to the, because we are all from the commerce domain, we are all good in ratios. I'm just throwing a little inputs about the CAR, profit to book ratio, the price earning ratio, and market capitalization. I have given you the current PE ratio, current market capitalization, current PB ratio, and CAR of all these 6 banks, which are the potential candidates for privatization. Okay, so among this, I would be able to understand that the Central Bank of India, Indian Overseas Bank, Bank of Maharashtra are the potential candidates which can be in this list. One again issue is there. In the case of there is no much mention about Bank of Maharashtra. No one is talking about Bank of Maharashtra, which is also a equally underperforming public sector bank. I was told that I was going through the newspaper information. There is a huge pressure from the Maharashtra as a state. Okay, they are not going to allow the privatization of Bank of Maharashtra. Some like say lobbying is going on for not to take up Bank of Maharashtra for the privatization process. However, whichever it may be among these 6, whichever 2 banks among these 6 will be chosen for privatization based on price to book value. Okay, because a higher price to book value ratio may fetch a better realization, and price earnings ratio, because the bidder may offer better price than price and better price than the price under the present PE ratio. They will be also checking the market capitalization of these banks, because banks which can provide maximum funds by privatization can be a vital criteria to decide the candidate. And the last is capital adequacy ratio, because CAR of banks can be another important criteria to decide the candidates. So by considering these facts, we could be able to understand that a bank which is having a matter among these 6, which is having a good market capitalization, which is a reasonably good current account ratio, and price to book ratio and PE ratio for that. Whoever is good, the top 2 among the 6 banks will go for privatization as per the statement of Government of India as per the information from UPI. So what will be the method of privatization? They will call for bidders. So they will call for bidders, and whoever offer the maximum bid will be given, like say, these public sector banks will be sold to them. Why? What criteria these private banks will choose? Private banks never move out of cities and towns. Their customer base is different from that of the customer base of the public sector banks. Okay, the paupers of this country, the poorest of the poor of this country, are all into the banking system, and thanks to the financial inclusion process taken over by the present government, present Prime Minister, like Jan Dhan account and other things, we have massive account holder base in this private public sector banks. So naturally, what will happen is that public sector banks, any entity which has a limited presence in towns and cities, will try to catch hold of a public sector bank which is having massive presence across the geography of our country. So this is going to happen in the near future. And in my opinion, from the documents which I have read, I would be able to understand that Indian Overseas Bank has the highest market capitalization, highest price to book ratio, lowest current account ratio, and second highest PE ratio is the best bet for privatization. If at all the, like say, Indian Overseas Bank is chosen, who will be the second? Because however, we understand that two public sector banks among the 12 are going to be privatized. I also told you which are the 6 probable candidates. Among the 6 probable candidates, Indian Overseas Bank and Central Bank of India are likely to be privatized. So now we understood that there is some privatization thing is happening. I mean, the talk on privatization is going rounds in our country. Will this privatization happen? That is the next question which need to be answered. Because when you look at the disturbances which is happening in this country, first is COVID. It's a pandemic period. I don't think, like say, serious discussions will be happening efforts will be taken by Government of India and the Reserve Bank of India to privatize. Huge resistance from the employees and the public. And already one public stake sale is pending from IDBI Bank, which is announced already, which is scheduled for financial year 22-23. So the 2 new public sector banks could be shifted to the next fiscal year, the 22-23, or it can be postponed for a few years because there is a huge protest against privatization by the employees as well as the public. In the meantime, capital government, because they have decided to privatize, it doesn't mean that government stopped its role. Government also pumped in funds into this public sector banks so that to meet their CAR and other requirements, which comes under the prompt corrective action framework of Reserve Bank of India. Okay. So, however, plenty of behind the scene activities is happening after the sale announcement made by our Finance Minister Nirmala Sitharaman in her budget speech. So it is expected that the government will take up amendments to the following acts, which is required, mandatory for. As I said earlier, there are some legal issues which has to be handled in the if it is a privatization process, amending the Banking Companies Acquisition and Transfer of Undertakings Act of 1970 and 1980. So, however, I don't know what will happen. We need to wait and watch. So, issues in privatization will be from this different aspects. Issues and concerns related to access to capital, issues and concerns related to banking services for the poor, concerns about equitable access to finance for all, keeping financial services affordable for all, security of the depositors' money, interest of the nation and its people. All these things has to be answered by those who are proposing privatization to not only to the bank employees who are agitating, to the entire country. So if PSBs are privatized, who will take control of them? Now, just understand, just imagine these public sector banks are going to be privatized. Now, the next question is, who is going to purchase that? To whose hands these public sector banks will reach after the restructuring process? The answer is corporate. So, the huge exercise went on into the nationalization process. The way hard work, money was invested into the system financially include every citizen of this country. Since India nationalization from 1969 till this day, it's around 50 years now. Okay, we cannot allow them to go to reach the hands of corporate just like that, because they are the two big ones who get the restructuring process for the corporate. It's going to be for the corporate and by the corporate. IMF says that the rise of the corporate power, even IMF has mentioned a point, the rise of corporate power has become a threat to the global economy. Because corporates has become bigger than country. Many corporates, if you look at the business of the corporates, compare with the GDP of a country, many corporates, hundreds and hundreds of corporates are bigger than countries. So it has become a menace. We cannot keep watching, corporates taking over each and every aspect of our life. So what way will get affected? As you all know, paupers and poor will get affected. Financial inclusion will get affected. Medium and small scale industries, micro, small and medium scale industries and enterprises will not get enough financial support as if they are getting from the public sector banks, and because they will be functioning only based on their only objective will be profitability. They will not be interested to cater the services beyond the cities and towns of this country, a country which is having still 60% of rural population. So they may distort their fair competition, adversely affecting common people. Later, the government may not have an option to intervene, even for stabilizing the situation, because India is not USA. USA in the 2007, 8, 9 financial crisis period, you all know many private sector banks failed. Who rescued it? Government of USA. The federal government came to the rescue of the failed banks, because USA is different. They can just print dollars as they are doing now during the COVID period, printing dollars, and they could be able to generate, money to rescue them. But which is not the case for India. We haven't taken such decision, and things will be much worse in the case of India if we still depend upon, if we allow corporates to ride the entire financial system of our country. So the PSUs played a stellar role in nation building. As you all know, I have mentioned several things. They have distributed loans to farmers, artisans, self-help groups, urban and rural, micro, small businesses. Okay, they are into the life of. They are part of us. Public sector banks are part of our life, which means we are all very closer with public sector banks. Which means that we cannot be separated from the public sector bank. That is why why I'm getting a bit nervous and a bit of. Disturbed when we hear about corporates taking up the public sector banks of our country. So you also might have heard about they are not so efficient. No, I'm going to tell you. Are they really efficient? No, they are all public sector, private sector. A scene is created in this country as if private sector entities, private sector banks are performing so good, and all these public sector banks has to be privatized. It is not so. IDBI Bank, evidence. Yes Bank scams, evidence. Lakshmi Vilas Bank failure, evidence. Lot of other banks, which is in the private sector. You might have heard about the Punjab and Maharashtra Bank failure, which is in the cooperative sector. So time and again, we are hearing about bank failures in this country, either in the cooperative segment, either in the public sector segment, either in the private sector segment. It's prone for failures. The issue is different. The issue is entirely different because of bad loans, because of crook, unethical board members and unethical CEOs of these banks, unethical lobby which is encouraging distribution of bad lands and by which NPA is getting accumulated. When the issue is different, why should we go for the issue is same for both public and private? Why should we prefer public sector banks instead of private sector banks? That is the question which remains unanswered after this discussion on privatization started, taking the main stage in this country. So, unlike common assumptions, private sector banks do not inherently perform better than public sector banks. Normally, what is said about privatization, whoever supports privatization, we need to, whatever point they say, we need to deeply scrutinize whether they talk the real truth or they talk with the hidden agenda to take up or to move away from public to private. Many private banks collapsed in the recent past, bringing to light the systematic failure in Indian banking system. Many private sector banks failed, lack of adequate regulatory supervision, ballooning NPAs, deterioration of asset quality, lack of corporate governance, fraud, scams, sanctioning of unethical loans. This is what has happened both in public sector as well as in private sector. We have evidence. We can talk about Punjab National Bank. We can talk about Yes Bank. We can talk about Lakshmi Vilas Bank. We can talk about any other public sector bank for that matter. So both are equal in terms of spoiling the banking system of our country. So 93 years old Lakshmi Vilas Bank collapsed in 2020. Government proposed a merger with LBB with the Development Bank of Singapore, DBS Bank. So advances declined. Bank was not able to raise adequate capital to address issues around its natural negative growth. Yes Bank, SBI, State Bank of India, which is a public sector bank, guided a private sector bank, Yes Bank, to come out of the mess. Punjab and Maharashtra Cooperative Bank was kept under moratorium. ILFS, DHFL are all NBFCs which got collapsed recently. You should be knowing about that. IDBI, which was a public sector, private sector, both way, which was one of the brink of collapse, was rescued by LIC, which is a government institution. Which means like the LIC, if at all did not come to the rescue of IDBI, it would have been collapsed by this time. So what I wanted to highlight is that systemic failure is there in the system, banking and financial industry of our country. No way to differentiate between public or private. It will be a harm to take a decision on, it will be a one-sided biased decision if a decision is taken for privatization of public sector banks without doing a due diligence on each and every aspect of the rising NPAs. Why do these banks fail? So just have a comparison of the gross non-performing assets of public sector banks, which is in blue, and private sector banks, which is in red. You can understand that with the total of 12 public sector banks, the total NPA is 546 crores. In private sector banks, the total NPA of 19 banks is 204,000. It's almost 40-60 ratio. And you all know how many public sector banks we have, how many private sector banks we have. We know what is the age of public sector banks and what is the age of many new private sector banks. What is the difference here in case of non-performing assets? Even there is a statistics which shows that in the case of non-priority lending, the non-performing assets in non-priority lending, private sector banks is comparatively more compared to the public sector banks. So which means that public sector banks rather perform worst compared to public sector banks in many parameters. Okay, so I'm just giving you the list of private banks which were put under moratorium, which means which were failed 1969. So till 2008, I'm not. I haven't included many other banks, like Lakshmi Vilas Bank, Yes Bank, and other stories are not included. From 1969 to 2008, 36 banks failed in our country. Starting from Bank of Bihar, National Bank of Lahore, Redugadi Bank, Global Trust Bank, all these are very famous cases which we know. So there are some flawed assumptions. Always people assume that public sector banks will fail, public sector institutions will fail. Give me 2 minutes, I'll have some order. So people have a wrong assumption. People in this rather, our parliamentarians, a few parliamentarians, section of the parliamentarians, section of the intellectuals, section of administrators, ruling party, all have a very bad opinion about public sector banks, which are rather performing comparatively better than private sector banks in our country. So both fail. If it is case of systematic failure, it has implication both on private as well as the public. So many urged the RBI to ramp up supervision process in order to identify bad banks and bad loans before the problem grows to out of proportion. So continuous failure of private sector banks has dented the reliability among consumers and depositors. You know what happened after the 2008-9 banking crisis? A data says that many companies, small industries, medium-sized industries, many depositors who deposited the money with private sector banks, actually in this country, in India, many people moved from private to public because the public
sector banks created a reliability rather than private sector banks. What does it show? It shows that there is a common opinion among the public in support of a leniency there for private sector, public sector rather than private sector. Whenever there are issues, bank scams like Punjab National Bank, NPS, Confederation of Industries, they always demand for oh, come on, public sector banks, they have NPS, Government of India should privatize. But these people will not open their mouth whenever such scams, unethical loans, bad loans appear in the case of private banks. When Yes Bank issue came, LEB issue came, there was no statement from CII, there was no statement from Ashocham, which means that there is a biased opinion among a section of stakeholders in this country, which has to be scrutinized, which has to be evaluated in the right manner before a decision on privatization is taken by Government of India. So another major argument used for privatization of public sector bank is the claim of private banks are efficient. Private banks are efficient. If private banks are efficient, then they should be more stable, not prone for failures. If private banks are efficient, why 2 lakh plus crore of NPS are there? Why S Bank failed? Why LBV failed? It is no. The very assumption that private banks are efficient is a misnomer. It's not true in the context of India. So, I should give some historical perspective of private sector bank failures in our country. Between 1947 and 1969, around 559 private banks failed in our country. In a period of 22 years after independence, just look at the number of private banks failed in our country. 559 private banks failed in our country. A lot of Indians lost their savings. A total of 736 private banks failed, amalgamated, ceased to function or transfer their assets and liabilities or went for liquidation between 1948 and 1968. It was only after nationalization of biggest banks in India, 1969. I always don't forget 1969 because the year in which I was born. So it was very closer to my heart. The banking industry attained stability from only 1969 because of nationalization policy. From 1969 to till now, 36 private banks, even after nationalization, even after serious efforts by Government of India and Reserve Bank of India closely watching the affairs of the banking system in our country, 36 private banks have been put under moratorium in public interest due to mismanagement and have gone out of existence. Several of them merged private sector banks got merged with whom? With the public sector banks of our country. For example, you all know about the Global Trust Bank failure in 2004. That Global Trust Bank merged with Oriental Bank of Commerce, not with another private sector bank. Oriental Bank of Commerce, which is a public sector bank, which rescued Global Trust Bank and its stakeholders, including depositors. If this is the case, can we expect the private banks won't fail? Can we tell private banks won't fail? If you say, for example, tomorrow the two proposal gets approved and the two public sector banks are going to be privatized. Say, for example, our candidate, Central Bank of India and Indian Overseas Bank. Okay, this is what will happen is that after a few years they will also fail, and these private sector banks again will depend upon the Government of India, support from Government of India, capital infusion from Government of India, or they will take the help of Government of India, expect Government of India to rescue them from the failure. This is the experience. So what I insist is that we have to think over whether to go for privatization or to safeguard the existing 12 merged banks, put what all possible means, excellent way of management, bring all the top experts in banking and financial industry, make the board of directors of the company, of these 12 banks, make an excellent person, the top-notch expert in India, or expert in the banking industry. Make him as a CEO, make them a CQ of these 12 banks. Let them perform very better, do service to the society and to this country instead of going for privatization. So, reasons for alarming rise in bad loans in private banks. Why do private banks also have huge NPAs for that matter? See, participants, you have to understand that The very reason for rising in NPS are not you and me. We also borrow a two-wheeler loan, a car loan, housing loan. All this retail loan we pay back. All this self-help proofs. The poorest of the poor women in this country, they take 50,000 rupees as loan, 1 lakh rupees as loan. They repay promptly. Compared to the non-performing or the, like say, bad loans which appear from the marginalized people of the society, compared to the huge high-ticket loans which is served to the corporates in this country, the NPAs are only mostly from the corporates. Bad loans of private banks are all for private companies, industries, and big exporters. Just 12 cases of non-performing asset referred to National Company Law Tribunal for insolvency and bankruptcy proceedings in all. Just 12 cases, 2,53,000 crore. Who are these 12 people? 12 are corporates, high net worth individuals, unethical individuals who borrowed hugely from the banks, and most of them escaped from our country without paying back the dues. I don't want to tell the names, you know. Still, many of them are here, giving hundreds of reasons. One interesting case, one has declared bankruptcy in the United Kingdom, one person. So who they are? Aren't all of them top private corporate borrowers? Why they did not repay the loan? Is it their efficiency? Should public sector banks be privatized or handed over to these people who will again give a huge pressure to Government of India? Dear participants, after privatization, if something happens to the functioning, or once if all privatized banks are going to be failed in the future, even government cannot rescue, which will create multiplier effect on the fiscal position of our country, on the finances of our country, on the entire economy for that matter. So that is why I'm giving more importance for not to take up a restructuring process of privatization. The next big culprits are the unpardonable sin committed by our own bank officers who got colluded, who got a good understanding with the corporate borrower without doing a due diligence on the proposal, without understanding the proposal. Huge money was given as loan to them, and these people who took the loan, wantedly they refused, they will not pay back to the public sector bank. But who tempted them and influenced them? Is it not the private corporate entities? Yes, it is the high net worth individuals and the corporate who, influenced the bank managers, got huge loans, and wantedly, willfully, they deferred paying back to the public sector banks. Now we are talking about the privatization. So take any major bank or NBFC failure in India, you will find the hand of private corporates in it. So people did not private, as such, you and me, the general people, we are not for, most of them, we in the sense, most of them, I'm not for privatization basically, because you're not as a policy, but looking at the loot that is happening even in the private sector, the failure of the private banks, I'm not happy that public sector banks has to be privatized. Rather, these 12 banks has to be, again I'm insisting, these 12 banks has to be preserved for another 20-30 years without any disturbance. Do a valuable service to the society in terms of let them lend to the private, no problem. Okay, I'm not against public sector bank lending, giving loans to private sector, but it has to be monitored. It has to be good loans, not bad loans. Okay, so that is the reason I'm time and again and insisting that, India's private sector banks failed miserably in terms of competing with public sector banks. After a lot of private sector banks are there in our country, they were not able to get a very good market share, hive away the market share from public sector banks, because public sector banks play a major role. They will continue to play a major role in the nation building activity, improving the livelihood of the citizens of this country, improving the micro, small and medium industries, businesses of the country. They still have a major role in a nation to build a strong and vibrant India. And hence, the corporate restructuring process, which we are talking about today, has to be truncated with the step of merger. Okay, merger should be the last one. We merged enough. Okay, we need 12 big massive banks at least We need more, but however, this tool has to be preserved for the future of this country. And the Government of India, the Reserve Bank of India, has to give rethinking on that. I even insist in NITI Aayog to reconsider their decision on privatization, because privatization never will give a solution for a efficient banking system of our country. With this, I will conclude for want of time. I wanted to take a few more hours, but for want of time, I am concluding now. Now I want the participants we can interact for a few minutes.
Yeah, very informative speech, Professor.
Thank you so much.
Well, sir, yeah, from this, from start to the end, your voice and commanding information.
Thank you. Thank you. Thank you.
Yeah, I'm very happy to record my sincere thanks to this portal. Anyhow, participants, scholars, faculty colleagues, you want to ask some queries about this topic.
Respected sir, well done sir, very good morning, very nice lecture sir.
Thank you, Dr. Moraji. Thank you.
A debated lecture, one-man debate.
Thank you.
Stood like Lord Muruga on the hills. You stood with the public sector, retaining the public sector. That's very good, sir.
My intention is in the name of restructuring.
We should not lose our identity.
Yeah, identity should not be lost, and we should not give a free hand to those so-called experts giving suggestions for hundreds of committees.
In short, can we say that we should not promote any more Malayas?
Definitely,
yes, sir. And my question to you, sir, one small question. In taxation aspect, whenever there is a profit, we levy tax.
Yeah.
Or whenever there is a whereas for the corporates, if they make loss, I think stringent punishment should also be insisted. What is your view, sir?
You mean that
if any bank or if any company makes a loss, then serious punishment should also be given.
Yeah, the thing is, if there is no implication of this corporate failure for the finances of Government of India, if they don't have any implication on the society as such, okay, there is no issue. However, what happens is that when it comes to the banking and financial industry of India, whenever there is a failure, it creates a serious implication to the society, to government, and to the the system in our country. In such a case, they have to be seriously punished.
Yes, sir. One more small question, sir. In case of if individual commits a mistake, the capital punishment is hanging to death sentence. Whereas in case of corporates, what can be the maximum capital punishment, sir?
Okay, I don't know, because it is I don't know, because I don't want to give an answer for this, because I'm not for a capital punishment for
yes.
Because
I think we should have something like that.
The thing is, they also play a major role in nation building activity. For
yes.
this, they create jobs. They contribute significantly to the GDP of our country. They they are part of our economic system.
At the same time, they enjoy the benefits also.
Yeah, they benefit. The issue is with the section of the corporate leaders,
okay,
who spoil the system willfully. For them, the punishments, the way the government to deal with such people has to be a bit harsh, and there should be some ways and means to control such unethical people spoiling the entire economic system.
Thank you, sir. Thank you, sir.
With regard to this financial restructuring for this prudence governance for your for privatization scenario, is there any substantial changes, sir, for this for either it may be for control or it may be for ownership or it may be for any other mechanisms to change for the business activities of banking sector?
Yeah.
Why actually when you register this at the portal? Ordinary people, marginalized people, they have to for lending money from the bank, they have to repay with the interest. the bankers are for collecting the money in different ways. What about that corporates? People are enjoying lot. Why the corporate people not to repay that money? But we have a coin like NPA. And we have to coin NPA, but they are not the bankers not to ready to collect the money.
Yes, sir.
So what is the prudence of the government's norms, or whether the lacking of the government or lacking of the banks?
I will give a brief input, sir, in this case.
The people are enjoying a lot, not in India. They escaped. Some of our participants, when you are talking on the scroll, they are escaping. Such sentence is there. Why the government?
There is also
remedies.
Yeah, I will tell you, sir. I will give some historical inputs and I will also give a remedy for this. Actually, thing is, historically, the reason for private nationalization of banks in 1969 is because of private banks, huge, hundreds of private banks, the deposits which they have collected, they misused and they failed. Repeated failures forced the government to go for nationalization. What is the usage of funds? Deposits were used for their own private, personal, whatever business idea, whatever it may be. That is the major reason for nationalization. Now, in 2021, if you do privatize, this is what is going to happen. In after 5 years, 10 years, same story will appear. What you have to wonder, the wise way to tread over this over a trivial situation is that what we can do is that these 12 banks can be created as a corporation. As life insurance LIC, we can have a corporation. In that corporation, we can have, like say, for example, some government of India wants to give some funds, pull in some funds. Yes, through that, there should be a committee of experts. Who in the finance field has to be the board of directors of these 12 banks, and government of India should not interfere into the affairs of these 12 banks. Government of India should come out of the day-to-day affairs of these 12 banks. Only experts, board of governors, they should deal with the day-to-day activities of these 12 banks, so that, like LIC has grown manifold over the period, like many public sector, other financial institutions as significant, for example, State Bank of India. So, like State Bank of India, all other 11 banks will equally grow, provide ethical lending loans to the corporates, raise good revenue, and then also share the dividends to Government of India. The Government of India, which is looking for funds for its fiscal deficit, say like Nirmala Sitharaman told, raising around 1.2 lakh crore. It will come as dividends, sir, if these 12 banks are managed for a few years. Very good. The dividends alone, these banks will contribute to Government of India. So what I say is that, so these are all like family silver. The gold and silver which is there in our bureau, it cannot be thrown out just like that. It has to be preserved, safeguarded for the future use of the future generations.
Yeah. Good. Participants, Dr. Venkateswaran.
Yes, sir. Sir, I would like to ask one question to you, sir.
Please.
As we know very well, in all the aspects, even people who got very less amount of loan, but they are being stressed a lot, but they don't have any other source to repay that. Probably this kind of issues will be more. Any other way that they can escape from this issue? Otherwise, they can ask permission for 6 months, 1 year, like that. Any schemes are there like that, sir?
Yeah, Government of India has given moratorium for, during the first wave of COVID, a lot of exemptions were given in terms of interest, in terms of reschedulement of loans. It was given to, extended to MSME also. That way, government has given a lot of, enough, I would say it's not lot, enough schemes were provided to them. Even now, for all those who are having the, need to repay, facing issues in repayment,
They have given enough direction from their concerned banks to meet the bank manager, discuss with them for reschedulement of the. It is there.
Because I hear that some of my friends still they got stuck in this. They are unable to come out and they are pressurizing every day many banks. So that's the reason I asked you, sir.
Yeah, see, the issue is there. Industry bodies, MSME associations, they are making representation. I agree that because small and medium enterprises, like say in our country, government has done what is possible from their side, but however, there is a big expectation. I also expect government to come out with new schemes to lift them from the distress.
Okay, sir. The lecture is wonderful, sir. We are enjoying it. Thank you. Thank you.
Thank you, sir.
Alepanji, shall I add something for this reply to this question?
Please, sir.
Actually, Reserve Bank of India and government has taken a lot of steps to help the COVID-affected MSMEs and individuals. As Palappan sir has said, they have given the moratorium for the installments and interest up to the last year September, and also resolution and restructuring in respect of MSMEs and the individual loans. In fact, recently in the monetary policy, they have introduced the resolution 2.0. With that, all the loans can be restructured in the repayment and also reschedulement of the repayment for up to 2 years for individuals in respect of personal loans and MSMEs. And in the last year, they have given the provisions for the borrowers, the businessmen, particularly MSMEs, the changes in the margin amounts and how to arrive the eligible amount for operating the account. So a lot of steps were taken. Only thing is the borrowers have to avail and the bankers have to look into a sympathetic view.
Okay, sir. Thank you, sir. Thanks.
Thank you very much, Professor Velmurugan, for your informative and value-based, because this is, privatization scenario. So your contributions we have registered on the portal of this Department of Corporate Secretaryship on behalf of the department and on behalf to I thank our resource person, Professor Velmurugan, for giving this excellent and also to narrate that for that privatization episode. So that is entirely different from that. The last 4 days, resource persons what they have to disclosed and spoke about this portal. It is entirely different that scenario. I am very happy to register this forum, online forum, because the faculty colleagues and research scholars across the country, they are listening. But the voice in which I really amazing.
Thank you, sir.
Yeah. She is good, excellent word. And Dr. Bashir Ahmed, sir, you also do that. What do you say? That your contributions. From day one onwards, I am watching and seeing you. I am very much thankful to you also, sir.
Thank you very much.
Now I invite Kausalya to propose formal vote of thanks.
Thank you, sir. Thank you for your wonderful presentation. You have cleared our ideas towards important aspects to be considered corporate restructuring strategies. Thank you, sir.
Thank you. So, thank you. Once again, I thank the organizer, Professor Vedirajan sir, faculty colleagues from the Department of Corporate Secretaryship, Agapa University, and my wonderful participants. Thank you. Thanks a lot once again.
Yes. Thank you.
Thank you, sir. Thank you. It was a wonderful deliberation, sir.
Thank you, sir.
Dear participants, for second sessions will commence 12 noon. You have to join this same portal 11:15 a.m. Thank you.
Thank you, sir.
Kung nga,